Look, there's a difference between having money and being truly wealthy, okay? Money is surprisingly fragile. Your bank accounts can be frozen, your stocks can crash to zero, and even your currency can become worthless from one day to the next. Most families lose their fortunes in just 3 generations, but on the other hand, look at the Rockefellers. They're still wealthy after 150 years. Or the Rothschilds. They've been one of the world's wealthiest families since before Napoleon. And that's because they've cracked the code on what economists call stores of value, assets that don't just hold their worth, but compound across centuries. So today, we're revealing the 7 stores of value that truly wealthy people use to preserve and grow their wealth, from the most obvious ones to the most surprising, and we're breaking down each one so you too can start thinking like old money. Welcome to Alux, the place where future billionaires come to get inspired. Alright, so the first store of value we're talking about today is real estate, but we're not talking about your average suburban house, alright? Take Bill Gates. Most people know him from Microsoft, but here's what they don't know. He's quietly become the largest private owner of farmland in America, controlling over 270,000 acres across 19 states. That is bigger than the entire city of Los Angeles. Now, obviously, Bill's not out there in the fields farming the land himself. This is a very strategic, long-term play. You see, real estate works as a store of value because it gives you 3 things at once. First, it is tangible. You can touch it, live on it, and use it. Second, it generates income through rent, crops, or appreciation. And third, when everything else gets more expensive, so does property. And the thing is, governments can print more money, but they can't exactly print another chunk of prime Manhattan real estate. I mean, nobody's finding any more land, and they're not about to make it either. That's why real estate is the go-to store of wealth. On a long-term time horizon, the built-in scarcity basically guarantees that your wealth is going to be safe. Now, the wealthy don't just buy one type of real estate, they diversify across multiple categories. Commercial real estate, for example, like office buildings and shopping centers, can get you some steady cash flow. Residential properties in prime locations are great for appreciation. You can buy farm and timber for long-term resource plays. And of course, those $100 million penthouses and historic estates keep their value while giving you the chance to live in absurd luxury. Each kind of real estate serves a different purpose, but the end goal is always the same: putting your money where it can last forever. The second store of value is stocks. Now, in general, stocks work as a store of value because you're buying a slice of a company that earns money while you sleep. Some of these companies pay you cash every few months just for owning them. Others grow and get more valuable as time goes on. But here's the thing. The truly wealthy don't buy just any kind of stock. Warren Buffett's a perfect example of this, okay? He's been holding companies like Coca-Cola, American Express, and Apple for years. These aren't Reddit's new favorite meme stocks or even Silicon Valley's hottest new startups. These are businesses people use every day. Businesses that have survived recessions, inflation, even world wars in some cases. And that is why they're called blue chip stocks. You see, when the ultra-wealthy want to preserve their wealth for decades, they buy real businesses, the kind that have already been making money for decades. And to make sure their wealth is even safer, the wealthy invest in industries they know people will always need or want, like food, energy, technology, banking, and medicine. The idea is simple. If you want your money to last, put it into companies that last. The goal here isn't to get rich overnight, it is to keep getting richer, quietly, for the rest of your life. And if you do it right, you're basically guaranteed to be wealthy forever. Now, the third store of value, it's not something you can hold or sell, but honestly, it might be the most powerful one on this list. We're talking about education. Because here's the thing, okay? Your house can burn to a crisp, your business can get shut down, your currency can collapse. But as long as you are still standing, nobody can take away what you know. And when you know how money works, how to think critically, how to actually look at the world around you and make smart decisions, that is when you truly become unstoppable. But let's be real for a moment, okay? Traditional education didn't prepare you for any of that. Nobody taught you how to manage your finances, how to build a business, or how to protect your wealth across generations. But don't you worry, my friend, that is why we built the ALUX app. Our app is a complete toolkit for people who know the value of real-world education. Unlike university, where you have to wait like 4+ years to realize nobody actually ever taught you anything about the real world, we give you practical knowledge you can apply immediately. Hundreds of thousands of ambitious professionals, creators, and entrepreneurs are already using the ALUX app to become the ultimate version of themselves. So, if you're serious about playing the long game, not just getting rich, but staying rich, then scan the QR code on screen to download the app and you'll get 25% off your membership and unlock everything inside. Remember, my friend, at the end of the day, the only asset that really matters is you. So the only way you're going to reach your goals is if you're actually willing to invest in yourself. That is why education is important. Now, moving on, the fourth store of value is probably the oldest in human history. We're talking about precious metals. Now, gold and silver have worked as a store of value pretty much since the human species started trading. For over 5,000 years, they've survived the fall of empires, the rise of new currencies, world wars, depressions, even the invention of the internet. They've outlived everything, and they still hold value today. Just look at central banks. These are some of the most powerful institutions on the planet, and even though gold and silver metals don't pay dividends and they don't generate income, they're still hoarding them by the ton because it's global, it's scarce, and it's immune to politics. When everything collapses, they just hold value, and that is exactly the point. When inflation hits, when currencies lose their worth, when markets start melting down, gold and silver are accepted everywhere. You don't need a passport or a banking system, and a bar of gold in New York is worth just as much in Tokyo or Dubai. That's why people call it wealth insurance. Precious metals are not going to make you rich, but they will keep you from going broke. And let's not forget, precious metals are finite, and they take real work to mine. So that scarcity, combined with their track record, is why they still sit quietly in the background of almost every ultra-wealthy person's portfolio. You don't see people flexing their gold and silver on Instagram, but trust us, okay? It is there. Now, the fifth store of value is government bonds, and out of all of the ones that we're talking about today, these are probably the most solid. You see, when the future looks kind of shaky, when nobody knows what's going to happen next, or when the entire world order is changing, the ultra-wealthy don't rush into crypto or real estate, they buy government debt. For example, during World War II, when Europe was on fire and nobody knew how the continent would come out the other side, Swiss government bonds became one of the safest places in the world to park your money. Switzerland stayed neutral. Germany didn't invade it, and its bonds became a kind of financial bunker at a time when investors were looking for safety more than they were looking for crazy returns. And that's the whole point of government bonds. When you buy a bond, you're basically loaning money to a government, and in return, they pay you a fixed amount of interest for a while, and then at the end, they give you your money back. Bonds are not exciting, okay? They're not sexy, but they're stable, and they rarely go to zero because they're backed by entire nations, which don't collapse from one day to the next, at least most of the time. The ultra-wealthy use bonds for their safety. Generally, people consider US bonds to be the safest because they're backed by the world's largest economy. But German bonds, Japanese bonds, or those Swiss bonds we mentioned earlier are also considered safe bets. These countries will probably pay you back. But here's the cool thing about bonds. When stocks go down, they often hold steady or even rise in value, so generally you can keep them in your asset portfolio, giving you reliable income, and if the rest of your assets tank all of a sudden, they'll offset some of the losses and give you some breathing room. So bonds are not the kind of investments that change your life or anything, but they'll at least keep your net worth from falling off a cliff when everything else turns to chaos. Alright, so moving on, this is where things start to get pretty interesting. The sixth store of value is fine art and collectibles. Sometimes it's kind of tough to wrap your mind around why someone would pay millions of dollars for a painting, as pretty as it may be. But take someone like Steve Cohen. He's one of the most successful hedge fund managers in the world, and he's got like $1 billion poured into his art collection so far. We're talking a multi-million-dollar Picassos, Warhols, and Basquiats hanging literally in his living room. But why? Well, showing off the art is probably part of the equation, right? But more importantly, he knows that there's only one of these paintings that he owns, and there will only ever be one. Fine art can be beautiful, yeah, but its timeless value comes from scarcity. And when the world's wealthiest people all have their eyes on the same tiny handful of pieces, well, those prices can reach into the millions, stay there, and even grow. Art also doesn't behave like stocks or bonds. It's not tied to interest rates or company earnings. It exists outside of the system, which is exactly why it works so well as a store of value no matter where you are. But it doesn't stop at paintings. When you've got more money than you'll ever need, there are more than enough collectibles to choose from. Think luxury watches from Patek Philippe, jewelry or rare Ferraris that can double or triple in price over the years if you know what you're doing. These days, even rare wines, vintage sneakers, or old comic books and Pokemon cards are being treated like asset classes, not because they're the most useful things in the world, but because they're finite, deeply desired, and in the right circles can be resold for boatloads of cash. Collectibles tell a story. That's what's fun about them, and those stories can carry millions of dollars in value, which is also what's fun about them. But some collectibles, though, they're not even things you can touch or see, and honestly, that's why cryptocurrency is such a controversial store of value, if you can even call it that. Ask around and people will tell you that cryptocurrency is either the future of money or a speculative bubble, or the greatest Ponzi scheme in history. Either way, it's become impossible to ignore it. Just look at Michael Saylor. He's the founder of MicroStrategy, an investment company that's bet tens of billions of dollars on Bitcoin. In Saylor's words, Bitcoin is digital gold, except it's easier to move, harder to seize, and provably scarce. So to him, this isn't a gamble. He sees Bitcoin as a long-term store of value. And the thing is, there will only ever be 21 million Bitcoins. That is it. It's built into the code, no one can change it, and no central bank can just print more of it. That hard cap is what gives Bitcoin its value. So like a lot of other stores of value that we've talked about in this video, it's just a matter of supply and demand. Other cryptocurrencies work differently. Some have fixed supplies, others are controlled by an algorithm, but the common thread between all of them is that they're built to be limited, safe, and decentralized. That's why more and more people, including billionaires, hedge funds, and even countries, are using crypto to store value outside of the traditional system. Now, of course, crypto is volatile, right? Its price swings are wild, and there's still very little regulation around it. But on the upside, well, the upside is potentially massive. And as a store of value, crypto also offers something no other asset does. You can hold it yourself, move it around the world on a USB stick and without a bank's permission. That is why the ultra-wealthy are putting a slice of their portfolio into digital assets. They probably don't expect crypto to upend the entire financial system, but if you want your wealth to last forever, you also cannot afford to ignore how things are changing. So there you have it, Alexer. Those are the 7 assets wealthy people use to preserve their wealth forever. Hopefully one day you can get to the point where you're picking between 2 vintage Ferraris for your next investment. But either way, remember that the only investment that truly lasts forever is in yourself. Okay, so go ahead and check out the Alux app by scanning this QR code on screen right now, and you'll get a special 25% off discount. Hundreds of thousands of people have already started changing their lives with the Alux app, and we would love to have you on board as well. So with that said, Aluxer, we'll see you back here next time. Until then, take care, my friend.